Hello there, good morning, and a very warm welcome to our webinar. The topic today is pension re-enrolment, and this is one of the sessions that counts towards our Pensions Discovery Badge that we'll be telling you more about later on at the end of the webinar. My name's Duncan, I'll be hosting and presenting, and I am joined today by my colleague Alice, who's standing by in the background, ready and waiting to answer any questions. Let's now take a look at what we'll cover in the webinar. So we'll start with an introduction to automatic re-enrolment, telling you what it is, when you need to do it, and an overview of the steps involved. And we'll also briefly cover how you would do this manually if you're not using our pensions module. We'll then move on to a demo of completing re-enrolment using the pensions module, which will all be done as part of your pension assessment. So we'll show you how to configure the settings, how to check your re-enrolment date, and then how to complete that pension assessment in the relevant period. Once we've covered all of that, we'll take a look at re-declaration, which is declaring your compliance with the pensions regulator, and we'll show you the checklist of the information that you'll need in order to complete that task. And then we'll finish with a look at some of your further support, including our upcoming webinars, how to access our help centre, and also how to access Sage U. So let's get things underway with an introduction explaining what re-enrolment is. So this is one of your employer duties under workplace pensions law, and it means that every 3 years, you must assess if any employees have previously opted out or left your pension scheme to see if they meet the criteria to be automatically re-enrolled back into your scheme. Now, the actual duties will vary depending on whether or not you have employees that need to be re-enrolled, so employees that fall into that eligible worker category, but it will always involve completing a declaration of compliance or re-declaration of compliance, and we'll talk about that towards the end of the webinar. Now, this is a cyclical re-enrolment, which means it happens every 3 years, and it needs to be completed in a window around your 3rd anniversary of either your duty start date or your previous re-enrolment date. So whatever that date was, you move forward 3 years, and then you've got a window of 6 months, which starts 3 months before the 3rd anniversary and ends 3 months after the 3rd anniversary of that duty start or previous re-enrolment date. So you are able to choose your own re-enrolment date within that window. Many people find it simpler just to stick with the 3rd anniversary itself. But for example, the latest possible re-enrolment date would be 3 months after that 3rd anniversary. So that could buy you a little bit more time if that suits you better. Once you've chosen your re-enrolment date and you've identified who needs to go back in to the pension scheme, you will need to redeclare your compliance with the pensions regulator, and that needs to happen within 5 months of the 3rd anniversary date. So if you decide to choose a later re-enrolment date within that 6-month window, that would mean you've got less time to complete the redeclaration of compliance, because that deadline is still in relation to the 3rd anniversary date. So let's now take a look at the steps involved in re-enrolment. So the first one is to choose your re-enrolment date within that 6-month window. The second step is to assess your employees and then re-enroll any eligible employees who previously opted out or left your pension scheme. The third step is to write to those employees to explain what's happened and that they're being re-enrolled. And then the fourth step is to complete your re-declaration of compliance. Now, you can read more about these steps in our support guide that I've linked to on the handout, so don't forget to download the handout if you'd like to read that later. Now, I'd like to just quickly run through the manual process for those of you who are not using our pensions module. So first of all, you will need to do a manual assessment to identify employees that meet the criteria to be re-enrolled. And I'll give you some tips in a quick demo on how to help you with that step. You would then need to assign the pension scheme to eligible employees who need to be re-enrolled. So that would be done manually if you don't use the pensions module from the pensions tab. And then you can use the letter templates from the pensions regulator website in order to write to your employees, letting know that they've been re-enrolled. Now, let's take a quick look at that manual process in a demo. So I'm just going to bring these slides down. And we're going to jump into Sage Payroll. Now, first of all, if you want to check the criteria for an employee to be eligible, you'll find the information in your legislation settings. So if I go to the company tasks here towards the bottom left corner and then go into legislation, you'll see within the legislation settings, I have an automatic enrolment tab. And then from here, it is the earnings trigger that will trigger enrolment or re-enrolment in this case. And that is the equivalent of £10,000 per year. So for example, if you have monthly paid staff, the earnings trigger for a monthly employee is £833. Now the age to be automatically enrolled is between 22 and state pension age, as you can see in this section here. So eligibility age is 22, and it runs right up to state pension age. So if you've got employees that previously left your scheme or opted out, they're between 22 and state pension age, and they're earning above the earnings trigger on your re-enrolment date. Those are the employees that need to be re-enrolled. Now, I just want to make you aware of a report that you might find useful when identifying the employees that need to go back into a scheme. So this is available in all versions of Sage Payroll. You don't need the pensions module to run this report. So I've just selected all of my employees just there, and I'm going to go into this reports icon above the employee list. Now I've added it to my favorites, and it's the pensions automatic enrolment report, but it's actually found within the company folder within reports. So if you select company and scroll down, it's this one just here that I've added to my favorites by clicking on the star. And if I run the pensions automatic enrolment report, I'm just going to preview it on screen. What it's showing me here are the employees that it's identified are eligible, but who do not currently have a qualifying pension scheme. So it looks like there are 3 employees on my payroll that would meet this criteria. And you may have already recorded opt-out information in their employee record, as there's boxes to do this if you're not using the pensions module. But these are the employees that will probably need to go back in to the pension scheme. Now, when you've identified those employees, if you're doing it manually, you'll need to manually assign the pension scheme. So as a reminder of where you do that, you would go into the employee record. You would click the pensions tab. You would then click on to manage schemes. And from here, you'll most likely see the original scheme with a start and end date. So this employee was enrolled back in July. They opted out at the end of July 2022. And then if we're putting them back in, we would add that pension scheme again by clicking add, select it from the list. We'd enter the join scheme date, active membership achieved. So that would be your re-enrolment date for join scheme, and you can set the appropriate percentages. Now, I'm not going to do this because I use the pensions module, and all of that part of it will be automated when I do a pension assessment, but I did want to point out where to do it for those of you that don't currently use the module. What you would then need to do is to write to your employees, send enrolment details to your provider, and then your employees, if they still don't want to be in the scheme, can follow the opt-out process in the usual way, and then they can come out and you can give them a refund if you deducted any pension contributions. So that there is the manual process, but for any pensions module users, the good news is that many of these tasks are automated for you, and a lot of this happens in the pension assessment option. So what we're going to focus on for the rest of the webinar is re-enrolment using the pensions module, and we're going to start with a quick look at your re-enrolment settings. Now, re-enrolment settings can be accessed at any time from your pensions module settings. And within here, you will see your chosen re-enrolment date, which will default to the 3rd anniversary of your previous re-enrolment date or duty start date. And it will show you your window, your 6-month window to complete re-enrolment. And this is where you can amend your re-enrolment date if required. There's also a section which allows you to exclude employees who left or opted out of your pension scheme within 12 months of your re-enrolment date. As under the legislation, you don't have to re-enroll employees that opted out or left within 12 months of re-enrolment, but you can choose to re-enroll them if that's easier. So you've got the option in these settings to include them if you're going to re-enroll everyone that meets the criteria, or to exclude them if you want to exclude those employees who recently opted out or left. There's also a section for individual exclusion reasons, and I'll show you some of those in the demo. So let's take a quick look at where to find those settings. And as I say, you can access them at any time. So starting from your company tasks, where we were before, you'll then find pensions module settings. There's a link here on the left-hand side. Now it will confirm your original duty start date, which in my case was the 1st of July 2022. That's when I took on my first employee. And you can see that we're approaching 3 years from that date, which will be the default re-enrolment date. And I can check that by simply clicking Manage Cyclical Re-enrolment Settings. And you'll see it has indeed defaulted to the 1st of July 2025 as the re-enrolment date. Now it can be changed from here. So if I decided I wanted to delay this, I can delay to any date within 3 months of that anniversary date. Also possible to choose a date in the 3 months before that anniversary date. But if you choose a date that's in a period that you've already completed, so if I chose the 1st of June, for example, and I've already completed payroll for that tax month, it will tell you that that's a historical date, which means it can't complete the re-enrolment for you. So we're actually going to stick with the 1st of July as our re-enrolment date, and that's in a period that we haven't yet processed. The next section was about the re-enrolment exclusions. So as you can see here, employees who opted out or ceased membership within the last 12 months of your re-enrolment date can either be included and put back into the scheme, or you can choose not to include them. And I'm actually going to set this to exclude from assessment. And then this section at the bottom is to set individual exclusion reasons. So there are certain circumstances which will mean that employees do not have to be enrolled into a pension scheme. And if you click on Manage Employee Exclusions, you can set individual exclusion reasons from here. Now, to give you an example of when you might use this, let's say that employee 10 previously opted out of the pension. We're approaching our re-enrolment date, but I know that employee 10 is working his notice period. That's a valid exclusion reason. It means that we don't have to put them back into the scheme if they're working their notice period. So I could apply that exclusion reason to that individual, and that would mean that they won't be re-enrolled because they're going to be leaving us soon. Another common exclusion reason is in relation to directors without employment contracts. So that can be set where applicable to the relevant employees. Now, I'm not going to set any of these exclusions. I'm just going to cancel out of this screen. But I am going to exclude the employees that opted out recently within 12 months of this date. And then to save these settings, I can click on to save. And then I'll click save again to save my pensions module settings. So I can go in and out of those settings as many times as I need to before I run my assessment in the period of my re-enrolment date. So now that we've reviewed those settings, the next thing I want to talk about is running your re-enrolment assessment. Now, this must be completed in the same pay reference period as your re-enrolment date, and the pensions module aligns pay reference periods to tax periods. So it's in reference to either a tax month if you pay monthly, or tax weeks if you pay weekly, fortnightly, or 4-weekly. Now, if the re-enrolment date happens to be after the assessment date, so the pay date in that same tax period, any contributions that are due will be deducted in the next pay reference period, and those first contributions would include a pro rata amount in relation to the previous pay reference period. Now, if that's sounding familiar, this is something that was quite common for employers that had a staging date, or perhaps on your previous re-enrolment, and especially with monthly payrolls, where pay date tends to be towards the end of the calendar month. If you've set your re-enrolment date to be the first of the month, which would obviously fall after that date, but in the same tax period. This is best illustrated with an example, so let's show you one now. So I have an example of a payroll where employees are paid monthly on the last day of the calendar month, and my chosen re-enrolment date is going to be the 1st of July. Now, 1st of July falls into tax month 3, which starts on the 6th of June and ends on the 5th of July. And that means that I will need to run a pension assessment on my 30th of June pay date, which will then re-enroll eligible job holders who previously opted out or left the pension scheme. So it will assign the pension scheme to them. It will set their join date as the 1st of July, but it would not at that point calculate any deductions, as the contributions will be taken for the first time on my next pay date, which will be the 31st of July. Now, on that pay date, the first contributions will be slightly higher because they'll include a pro rata amount that relates to the period between the 1st and 5th of July, which was in the period of assessment. So quite a common scenario, and one of the benefits of doing it this way is it does give your employees a good window of time to complete an opt-out request with your pension provider before the first contributions are actually taken. If you have taken contributions and the employees opt out, they'll still get a refund, but some employers try to plan it this way just to give their employees a chance to do that before any deduction is taken. So what I want to do is bring that example to life and show you a demo of re-enrolling employees using the pensions module. So we will just return to our demo at this point. I'm going to go to my payroll tasks here on the left-hand side. I've already set my next pay date, so it's the 30th of June, tax month 3, so that's the same period as my re-enrolment date. And I just want to show you 3 employees that previously opted out of my pension scheme, and currently within their employee record, we can see they have a status of opt-out. So the first employee opted out back in July 22. The next one left the pension scheme in November 22. And the last one actually opted out more recently. So they only joined the company in April. They were auto-enrolled at the time. They chose to opt out. So they got opted out in May. And because that's within 12 months of my re-enrolment date, I can set it so that this employee is not re-enrolled and they would remain opted out until the next re-enrolment date. But those are the 3 employees that we're going to keep an eye on. But if I select them all, you would run through and enter their payments in the usual way. So I'd enter all of my payments for the 30th of June. I would then go into the pension assessment option. And because we've reached our re-enrolment date, we'll see the following pop up, confirming our re-enrolment settings. So 1st of July is the re-enrolment date. That was a 6-month window. And I've set to exclude employees who opted out within the last 12 months. But we can change those settings. We've got a final chance to change them if we want to. We can click on this option if we wanted to go ahead and do that, or indeed set any individual employee exclusion reasons. Now I've reviewed these settings and I'm ready to proceed. So I'm happy with the settings. I've ticked the box just here. If I then click proceed, that's going to take me into the pension assessment. Now, as always, it's going to prompt me to take a backup first. And this time I'm going to make sure I take a backup. So I'm going to call this re-enrolment backup, just so I know that this can be restored if I need to undo anything that's happened in this assessment. That backup has been successful. And we can see the pension assessment has opened. We're looking out for any flags indicating a change to the worker category or status. And I can actually see 2 flags here on the left-hand side. And if I hover over one of them, it is telling me that this is an eligible job holder re-enrolled this period. If I check the status and hover over this spyglass, it shows me that they're eligible because they're earning above the trigger and they're between 22 and state pension age. The enrolment date is set to the 1st of July, which is the re-enrolment date. And then looking at the pension scheme details, pension scheme has been assigned and we know the percentages, but there are no contributions this period. And that's because our pay date in this period is before the re-enrolment date. So it's actually calculated the pro rata amount behind the scenes, and it will add that automatically to next month's pension contribution. That's similar for employee 3. They've also been re-enrolled, but notice that employee 10 remains opted out, and that's because of the setting. We've chosen to exclude employees that opted out recently, so they're going to stay opted out until my next re-enrolment date. And a quick tip, if you've got a larger payroll than mine, you can use this filter at the top to choose change this period, and that should give you a good view of any changes, including employees that have been re-enrolled. Now, if these employees did not meet the criteria to be eligible, they wouldn't have been re-enrolled this period, and they would remain opted out until the next assessment for them, which will be the re-enrolment, the next sort of re-enrolment assessment in 3 years' time. So if they're not eligible in the period of your re-enrolment date, they don't need to go back in until the next re-enrolment date 3 years down the line. Now, if you want to, you can email, print or export the results of this assessment. So I'd recommend that you do one of those just to keep a copy of this screen. And then if I close out, it then confirms that I've assessed my employees for re-enrolment, and we must now complete our redeclaration of compliance, send member enrolment files to the pension provider. So you would do that the same way that you would do it for anyone else that you're enrolling into the scheme. So you might use send pension data, you might run a report to create a CSV file, or you may do it manually. And we also need to write to employees, letting them know that they've been re-enrolled. Got 6 weeks to do that, and we can use send pension correspondence to generate those letters. So I'm going to click on to close to that message, which returns me back to the main payroll desktop. And then I can complete payroll in the usual way, running my payslips and pre-update reports, uploading payslips if necessary. I'm now going to run update records. And then I would complete the usual post-update tasks. So FPS, sending pension data, reviewing the pension payments, and finally, here at the bottom, sending pension correspondence. So let's go into this option now, because this is where we're going to find the re-enrolment letters. So I've got one for each employee that was re-enrolled. You can preview it by clicking on the letter title. So this just tells them their enrolment date, criteria to be enrolled, some information about tax relief, then some FAQs on page 2. So this is based on the pension regulator templates. And to actually produce these for your employees, they can be printed or emailed. You would select the relevant letters like so. You'd record the sent on date. So I'm going to send these on the re-enrolment date. I'm going to select user, sent by, and then when I click on to send, for me, that's going to print them out. It's going to pop up with the default printer. I'm just going to cancel out for this demo. I don't actually want to print them out. And that will also attach a copy of the re-enrolment letter to the employee record. And it will then include these letters in the historical section. So I can see when they were sent and which user sent them. So a quick look at the 3 employees that we know had previously opted out. So for employee 1, looking on the pensions tab, they now have a status of auto-enrolled. It's added the pension scheme automatically and it's set the effective from date. Exactly the same for employee 3. So they're back to being re-enrolled. And then for employee 10, because they opted out recently, they remain opted out, so no change has been made to their record. Just moving forward now to my next pay date, which will be the 31st of July. So this will be the first time that we see pension contributions for the employees that have been re-enrolled. So let's assume the payments are already entered, and I'm going to jump straight ahead to the pension assessment. So you take your backup in the usual way. That's going to take you into the assessment screen. And in this period, you can see for both employee 1 and 3, we now have pension contributions being taken. And for employee 3, they earn the same as employee 2, same qualifying earnings, but the pension contribution is higher this month, and that's because it includes that pro rata amount. Now, if at this stage, the employee has opted out by following the process set out by the pension provider, you'll be able to enter opt-out details. And because this would have been the first pension contributions in this example, just means that we won't need to arrange any refunds. So you could enter opt-out dates. No option to refund because nothing has been contributed so far, but you can complete an opt-out if required. And that then opts them out again until our next re-enrolment date. So they have 1 month from the date their active membership was achieved, so the date you sent their details to the provider and gave them their letter in order to opt out and get a refund. So yeah, that is re-enrolment using the pensions module. Just to recap the main steps there. So as you go into the pension assessment in the same pay reference period as your re-enrolment date, you will see your re-enrolment settings and you get a final chance to change them if required. You're happy with the settings, you tick the box and you click on to proceed, and that's then going to take you into the pension assessment screen. You're looking out for any flags indicating a change this period, and that will then display employees that have been automatically re-enrolled. Now remember, if the process date is before the re-enrolment date, there'll be no contribution at this point, but the pro rata amount will have been calculated ready to add on to the next period's contribution. Once you close out of the assessment screen, you'll see the details of your next steps, which include the redeclaration of compliance, sending the new enrolment files to your pension provider and writing to your employees. And you can send them letters generated by send pension correspondence. So record the date you sent them, which will become their active membership achieved date. And that will also be attached to their employee record. So that's what you would do within Payroll. But the other thing you will need to do is your redeclaration of compliance. Now, a quick reminder of the timescales here. So it is based on the 3rd anniversary date rather than your chosen re-enrolment date. So you've got 5 months from the 3rd anniversary of your duty start date or previous re-enrolment date to complete your redeclaration of compliance. And this will involve providing information to the pension regulator via their online portal. So statistics on how many employees have been put back in, how many employees you have in total, and details on your pension scheme. Now, you can read more about this, and you can also download a handy checklist of the information that you will need to provide when you come to do the re-declaration. So I have linked to the information on TPR's website, but just to show you the checklist itself, so I downloaded this earlier. You've got some things that you'll need, things like your letter code from the pensions regulator, contact details. And then it's looking for the total number of staff employed, number that you've put back into your scheme, etc. So it'd be good to have a look at this in advance of completing your re-declaration. And there is a series of top tips on there to help you with a smooth process. So that is available if you follow the link on your handout. That takes you to the pension regulator's website. So completing your re-declaration of compliance. And this is the support and resource. This is the checklist that I've just shown you on screen. So yeah, that's it done. That is re-enrolment and re-declaration. And that brings us to the end of what we're going to cover in today's webinar. Now, we do have some time remaining, so we are going to stick around to continue answering your questions. So if you've been saving any up, if you can pop them into the Q&A now, we'll get an answer over to you. But I did want to tell you a little bit more about our Pensions Discovery webinar series. So this has been taking place throughout the month of June. This is actually the penultimate session. The last session is this afternoon, which is our pensions quiz. And to qualify for that digital badge, you need to have attended 5 different sessions from this series, plus the pensions quiz. So the quiz is the mandatory element, plus 5 other sessions. And if you've done that, we will issue a digital badge to you, and you'll receive an email with all of the details in the first couple of weeks of July. Now, we do have recordings of these sessions available if you missed them, but recordings do not count towards earning the digital badge. So hopefully many of you will have attended at least another 4 sessions, and you'll be joining us this afternoon for our pensions quiz. I also want to tell you a bit more about some upcoming webinars next month. So we have a couple on statutory payments covering statutory sick pay and maternity pay. Both of those sessions are repeated as well later on in the month. Got online pay slips, get your payroll done, processing payroll, so a great session for beginners to Sage 50 payroll. Got a showcase on Sage HR's core HR module, a guide to HMRC submissions, and getting your payroll done, your month-end tasks. So all of these are completely free to attend. If you'd like more details or you'd like to sign up, just head to our website, sage.co.uk/webinars. Further help can be found at our online help centre at sage.co.uk/help, or you can access this by clicking any help icon that you find in Sage 50 Payroll. If you need to contact our support team, go to the help centre first and choose the topic that you need help with, and then you'll find a get in touch link, which will show you the best way to contact our support team with that kind of query. Also find a link to our upcoming webinars, plus a range of articles and support guides. And another fantastic learning resource is Sage University, which you can access at sageu.com. It's completely free to sign up and create your profile. And then if you find your way to the Sage 50 Payroll Learning Path, you'll find a range of e-learning courses, some online certification, and also a load of bite-sized learning to brush up on your payroll skills. So check out what's available at sageu.com. So the rest of the time will be dedicated to answering your questions. If you'd like a copy of the handout, don't forget to download that before you leave. And if there is any Q&A you want to keep hold of, you will need to copy and paste that into another document. We're going to send you a follow-up email later today, which will include a link to the recording of today's session. So look out for that arriving in your inbox in a couple of hours. And when you leave us today, you will be invited to take our webinar survey, and we'd love to know what you think of these sessions. We do read all of your feedback. We try to use that to ensure that we continuously improve our webinars and make sure we're delivering the best service we can. So if you wouldn't mind spending a moment to complete the survey as you leave, we'd very much appreciate that. With that said, I'm going to go on to mute for a few moments just to help out with the last remaining questions. If anyone's leaving us now, thanks so much for joining us at the webinar today. Hope you found it useful, and we look forward to seeing you on some other sessions in the near future. But I'm going to go on mute for now, and I will come back when we're ready to close the webinar down. So I'll speak to you shortly. Hello again, everyone. Thank you so much for those of you that have stuck around towards the end of the webinar there. I think we've answered the majority of the questions. I think the last couple of answers will be sent in the next few minutes. So I thought I'd come back just to wrap things up and take this final opportunity to thank you for attending the webinar today, and look forward to seeing you perhaps at our pensions quiz this afternoon. If not that, we have plenty of other webinars coming up in July as well. So enjoy the rest of your day, and we will see you on the next one. It's goodbye for now.